Hi everyone, I'm Ken from CryptoTradingKS and the inventor of the CTKS Method and BORSOG trading. If you're new, a very warm welcome. And welcome back, KS family. From my 30 plus years in financial markets, I explain the smart money mindset to assist you to be more of a financial blessing to yourself and those you love, gaining real wealth and positive excellence in the process. Let's run the numbers. Bitcoin is currently down 4.52% to 18,869. Ethereum is down 1.8% to 1572. Please note, I don't have WhatsApp or Telegram. If anybody reaches out to you in any YouTube channel comments and wants you to contact them on these platforms, run like hell. They're scammers. If you're going through a life pullback at the moment, please know that our community's love and healing thoughts are with you. You're not alone. Hang in there. The sun will come out again. As crypto technical analysts, we look deeply into the markets to try to determine what the potential probabilities are for an up move and a down move. Getting synchronized in with the market is incredibly important. The market doesn't know you, and it never will, but it will reward your active learning and your patience. And well done to all the beloved community members, our global family, who reached out and shared their BORSOG codes. You're legends. Rule 225, Bitcoin cannot escape the stock market's gravity. We had the potential to come in for a technical bounce, but that was quickly dispelled because fear arced up, and that brought the Nasdaq 100 and the major indices and also Bitcoin with it. Bond prices continue to collapse, bond yields continue to spike. We saw a little bit of a respite in gold, but it was very short-lived, and the dollar was on an absolute rampage to the 110 level. As a BORSOG and trading community, we're just waiting for the signals to turn in our favor, and then we'll get in. One thing that you always want is your synchronization. When you look at junk bonds, this is showing the market risk off. The junk bonds are basically saying, I'm not interested. And we can see oil just retracing, continuing to find a level of support. The markets are a little bit rattled now because Fed Chair Powell will speak on Thursday. We also saw, used to be Saturday, George and Waller would speak from the FOMC. That was changed to Friday. And what do we have here? Wednesday, 3 more speakers from the FOMC are speaking. The next FOMC meeting is in 15 days, and that's where the Fed will raise the federal funds rate. Now, what are we actually looking at? The market was widely pricing in a 50 basis point increase about a month ago. The likelihood of that is very, very low now. It's kept on dropping. It's now currently 28%. The probability of a 75 basis point increase is now 72%. And don't be at all surprised after the FOMC members start to speak and Jerome speaks again, that a potential 100-point increase probability will turn up on this chart. The Fed needs to fight inflation, and what tool does it have? The ability to raise interest rates to crush inflation expectations. The problem is there are systemic issues causing inflation, and the Fed literally only has limited capability to fight inflation. So what is it going to do? It's going to do demand destruction. We can see the Fed balance sheet has been decreasing for many, many months, just as they said it would. People are starting to understand just how entrenched inflation expectations actually are. And we can see that because the 5-year break-even inflation rate and the 10-year both kicked up a little bit, even though the Nasdaq pulled itself down, and of course other major indices came down, and Bitcoin came down with it. We saw an amazing fake out in the past session. The dollar absolutely spiked through this very heavy level of resistance, this smart money sell line, and it did sell down, and then it charged through it. This is the dollar. Raoul Paul calls the dollar the global wrecking ball. I think it's a very apt analogy. As crypto technical analysts, we mark up our charts with the CTKS method, and these Standfield lines, these SLs, are daily derived dynamic smart money buy and sell levels, and we can see that the dollar is above a major support at the moment, coming in currently at 109.913. Please be aware these levels change day by day. I believe that we're going to see continued weakness in the markets until the dollar reaches potentially around the 111 mark. When the dollar actually starts to fall off, I believe the markets will start to rally back. The question is, should you buy this dip? I would urge against it. Of course, you need to do exactly what works for you. Nobody can control the buy or the sell button, only your finger. Always do what you feel is best for you. When we look at the metals, we can see the metals coming down with the inverted DXY and also the inverted VIX. When we look at the dynamic smart money buy and sell levels on gold formed through the CTKS method, we look at the Standfield levels up between 758 and 1770. There's so many of them. There's so much resistance up here for gold at the present time. What about support levels? Gold is currently trading at 1713.40. We can see a dynamic support level at 1707.80, one at 1689.80, and a couple more down in the 1674 to 1677 level. If the dollar rallies, it's quite likely that gold will push itself down to the 1677 levels. If the dollar actually decreases, you can see so much resistance around the 1758 mark. The sell-offs in the global market are reflecting the sell-offs in the US market, and that's because the US market takes about 60% of every dollar put into investment in stock markets. This is important to understand. How the US goes, the rest of the world does too. And Masterclass students, you'll receive a deep dive on LV19. When we look at the All-Country World Index, the ACWI, we can see so much rejection of higher prices. The sellers are coming in and hammering global markets down. This shows globally more weakness can be expected. As crypto technical analysts, we're not scared at all about current market conditions. In fact, we're waiting eagerly to get in. That's rule 252, prepared, not scared. Active patience is the key, and not all sell-offs are created equal. We've got to exercise a degree of caution. When we look at the 9 sell-offs and recoveries in the S&P 500 since 1966, we can see the markets are making their way down. We would anticipate more negative price action, but it's really important not to have a story. We have to view the market by its own movements. If the market suddenly says, "Oh, I'm going up," okay, we have to be ready for that. You can see many potential scenarios could play out. We're really in the early phases of this. We don't want to assume too much negative bias at the moment, but we want to read the market as it stands right now, and that's exactly what we're doing. We're currently in a midterm election year, and we know that September and October can be very problematic months for the stock market. But what we do see is that when we look at midterm election year seasonality patterns since 1946, we generally have a rally into the end of the year. And the midterms elections are happening on November the 8th, the general election nationally. Financial markets, force yourself up against yourself. Now you say, Ken, what are you saying? Force yourself up against yourself. What does it mean? It means that all the dark places of your personality will be visited by investing and trading. And that's why we have, I am dedicated and committed. I win or learn and never blame. Just to explain that a little bit more, the true enemies are self-doubt and self-sabotage that use blame to remain hidden. If you ever find yourself blaming, you're being subjected to the power of self-doubt and self-sabotage. The enemy is never outside ourselves, it's just our thinking. In Zones 1 and Zone 2, blame is a critical component of losing money. What we actually need to do as professionals, as smart money, is to get out of zone 1 and zone 2 as quickly as humanly possible. And all traders and investors go through zone 1 and zone 2. So it's nothing abnormal at all, but staying in it is just a nightmare. And how do we get out of zone 2, zone 1 and zone 2? It's through learning, patience and rules, courage, and especially positive excellence. Positive excellence is all about defeating self-doubt and self-sabotage. Self-doubt and self-sabotage say things like this to you: it's you against the world. You have to fight every single person to get anything in life. It is simply not true. The world doesn't exist like that. Your contribution is always rewarded. When we look at positive excellence, we do focus a lot on kindness, because kindness is the fastest way to break the back of self-doubt and self-sabotage. But literally, self-doubt and self-sabotage, they want to live. They're like living entities, living emotional entities. They don't want to be destroyed through this thing called kindness. They want to blame, they want to get into conflict, and they want turmoil. When you find yourself in turmoil, wanting to get into conflict, please be kind to yourself. Understand that you do the best with the available knowledge that you have. And of course, be kind to others. Why is this important? Because if you blame, the market will take all your money. It gets worse than that. If you blame, you will destroy relationships, and also you will destroy your inner and outer peace. Therefore, finding fulfillment and meaning can be very, very difficult. What's the solution? Just start with kindness. And you'll find when you're investing in trading, there's so many opportunities to be kind to yourself. For example, about 28 days ago, I started talking about the potential weakness inside the market. And I've been urging people to take caution. I created the concept of the Armageddon line to make it more concrete to people what could actually occur. When we had a cross in the Armageddon line, and around the 11th of June, we saw a very steep sell-off, nearly 40% sell-off. A lot of people would have come in here to buy the dip, and they would say it kept on dipping. And we may see exactly the same thing now. That doesn't mean that we're scared of the market. We're not scared of the market at all. We're just waiting actively with patience. And of course, we have the courage to get in when the situation changes. I've been seeking to prepare people for about a month now, 28 days. What will you do, for example, if price starts to fall below this Armageddon line and we see another climactic sell-off like this? What will you do? Did you do it up here when the weakness was starting to come through the economic system and crypto? Or are you waiting? And how long do you want to wait? This raises the natural question, Ken, how low could this thing go? One scenario is we see a sell-off that was akin to the crossing of the Armageddon line previously. For example, at that stage, we saw the markets fall about 38.5%. If we actually clone this area and we look at it in relationship to the fact that we're just coming underneath the Armageddon line at the moment, that would actually force prices to sell off, if we see the same thing, down to around $11,755. Is this a pre-drawn conclusion? Will this happen? Not necessarily. What we're actually doing is preparing ourselves. That's what we need to do as professionals. We need to know what we will do. If price goes against us, goes nowhere, that means just goes flat or goes for us. But we look at the going for us last. We look at the going against us first. Remember that you and only you control your trade, investments and portfolios, but the market controls the return. And this is precisely why we do this BORSOG code each and every day. It's all designed to get you into synchronization with the market, to make you think very, very deeply about what you will do. We can see also that there are areas of support, for example, at around the 16,235 mark, up to about the 16,600 mark. And then there's a bit of a gap where price could actually fall without support. and then we have a smattering of different support levels, and a lot of them from 12,255 down to around 11,000. A lot of people look at this and say, oh no, I'm going to run screaming from the market. Actually, there's one more thing that I need to show you. Prices are always moving in a wave, and the more it goes down, the more it can come back up. If we saw for example, a decay like this, but we know midterm elections, politicians will basically sell themselves to gain a seat, so they don't want the economy to tank. At the same time, the politicians know that the Fed must act on inflation. So what could we see? We could see a dip down and a recovery back. Notice these percentages, and this is what smart money is all about. When you see the price coming down 38.57% and coming back up 62.2%, what it comes down, it goes back up a whole lot more than what it comes down. And this is also borne out by past history. When we saw the Armageddon line coming down by about 38.6%, it actually rallied up 43%. It didn't make it anywhere close to the top. You can see if you are on the wrong side of the trade, but on the right side of the percentage, you can do really, really well. You should not be concerned about these markets. You should be prepared for them. It is definitely a trader's market. It is no longer an investor's market, and it probably won't be an investor's market for the next 3 to 5 years. Now, what does that actually mean? Why do I say that? It realistically comes down to price moving in a wave. We may get very volatile markets. They're really quite overextended. And if you have trading expertise, you'll look at this negative kind of price action and say, this doesn't look very good. I'm not too happy with this. I might just sit out for a little while and let the dust settle. You do not have to be in the markets all the time. You want to get into the markets when there's a confirmed change of trend, and then you want to ride those waves. Yesterday, we saw the shorts spike out of the market, which was witnessed by the shorts decreasing and closing their positions. And then what did we see? The dollar went down, which caused a mini rally inside crypto, and the dollar was coming up whilst crypto was coming up. But we know the dollar and crypto are not always the best friends, and certainly that is the case. And you can always look at it this way. If you're in the stock market, looking at Bitcoin and having this knowledge about how to read it will actually make you a far, far better trader and investor in the stock market. It's very apparent that the longs got absolutely liquidated by the shorts, but let's check out the derivatives to see what actually happened. Over the past 24 hours, there's been 388.41 million in liquidations across 101,346 positions. And when we look at total liquidations across the past 24 hours, about 65% of those were long. What about the past 12 hours? About 83% long. Past 4 hours, 68% long. And the past hour, 74% long. When you look at the 24-hour mark, it's only 65%. I believe the long liquidations are just getting started. And let's have a look at how things have played out on a relative basis. We can see, of course, that far more longs have been liquidated than shorts, but we're not up to a really significant level just yet. Please let me know, what do you think? Do you think that we're going to see cascading long liquidations here, pushing price down, or do you think we'll see something else? I'm really interested in your thoughts. In the past 24 hours, global crypto market cap decreased 4.15% to 946.03 billion. We can see the not so stable coin USDC has been the greatest gainer over the past 24 hours, up 11.17%. Leo up nearly 2%. But then we've got stable coins in the top gainers. This means the market has sold off absolutely wildly. When we look at the greatest losers over the past 24 hours, we can see Nexo down 13%, Helium around the same, Poor old helium, it's been absolutely crushed over the past month. Bitcoin Gold nearly 13% down. Ethereum Classic 12% down. Uni about 11% down. We're not seeing any climactic sell-offs just yet. I always say, Rule 45, no alt can escape Bitcoin's gravity. But is it correct? Let's have a look at Ethereum. Bitcoin came down. What did Ethereum do? It came down with Bitcoin. What about Binance Coin? Pretty much mirroring the directional correlation here. It came down as well. What about ADA, Cardano? It also sold off wildly. XRP couldn't resist Bitcoin's gravity. Solana couldn't resist it. Doge couldn't resist it. DOT couldn't resist it either. And Matic came down really hard. If you're ever seeking an entry or exit position in any of your beloved alts, please look at Bitcoin first. We looked at the Standfield levels on Bitcoin. Let's have a look at what they are on Ethereum. We can see we're coming into a level of support just around the current price. That may actually facilitate a small technical bounce. But don't forget, there's a lot of sellers in this market, and the main markets are throwing their gravity on risk on assets such as Bitcoin and crypto. So what do we notice? We've got support down at 1462, around 1316 and 1285. Coming down a little bit further, we've got it at 1174 and 1160, and another one 1105. What do we also notice? There's quite a lot of resistance playing out at the 1757 mark. Also, resistance at 1679. You can see how this 1679 has been restraining price. We also have some upward resistance lines here and a higher one at 2097. The markets are a bit of a wild beast and they are untamed. So that's why we have to have our three-dimensional thinking about us at all times. We collect and stack probabilities to understand what could potentially happen. There's a lot of negative momentum inside the market, so potentially we would see or anticipate more negative price action. So what are those levels? We have a support level down about 6.14% and around 15.3% down, but we have resistance levels about 13% up on Ethereum. The market will reward your knowledge, and the more knowledge that you have, the better off you'll be. But it's not just your knowledge the market rewards. If you get into blame, you will lose money, guaranteed, because that's a signpost that self-doubt and self-sabotage have unconsciously taken over your trading decisions. You can see that BNB has lost its recent support levels. Also, some of these levels, some of these Standfield levels, which are the smart money buy and sell levels, formed through the CTKS method. The 270 mark is quite a strong level of resistance, and we passed through that without any concern whatsoever. The next reasonable stop is between this 257 and 254 mark, so just bear that in mind. We've got a lot of open air from that 254 mark down to 245, but we do have some solid support playing in at 238. We have a highly weakening technical structure on BNB. Please take a degree of caution. Inside the masterclass, I do deep dives on everything I talk about here and probably 100 times more content as well. And I'd like to let people know there are partial masterclass scholarships available. There are 4 of them. And I want to also thank Kerry Chambers, Purpuratum and Tails for being very generous and seeking to help others. It's really beautiful of you all. If you don't manage to watch the daily videos every day, a couple of days ago I released LV23, Potential Directional Secrets to the Market. This has a lot of hidden gems in it, as do all the other LV series as well. We asked yesterday in the comments, what do you think your purpose is in life? And John said, to be of service, repair family relations, espouse or spread positive excellence to people improving lives. It's really beautiful. And welcome, Roge. And J-Link said, purpose is bringing financial blessing to myself and those I love, and doing good deeds for others. Tiana said, increasing kindness, beauty, peace, and making the world safer. Very nice, my friend. And thank you very much, Jade, for your very insightful comments as well. And if you have friends or family who could benefit from positive excellence and what we do each and every day, please introduce them to our community by sharing a video. We'd love to see them here. We have one of the best communities on YouTube. And well done, Nanad. Very, very nice purpose to guide people to be who they want to be and for them to feel safe. And Michael, my purpose now is to simply enjoy life and put a smile on people's faces. Just beautiful. We have an incredible community. I appreciate you all so very, very much. And Michael, I hope you get that flight home soon. We have so many amazing comments. Please, if you get the time, reading them would be fantastic. There are so many amazing comments here. I just want to thank each and every one of you. So much insight, so much thinking behind it, and so much wisdom. Crypto Turtle said something really, really interesting. To help other people as much as I can. But this is what I found fascinating. Be kind to my health and live my life free of toxic people. When you encounter toxic people, they take all the happiness and joy out of your life. This is an incredibly important thing. Toxic people are simply those people who blame. The hidden forces of self-doubt and self-sabotage are actually forcing them in a certain direction, which is self-destruction. And actually, I think it's quite natural to go through self-doubt and self-sabotage because it impacts every single human being. But the key is not to stay there. So when people are toxic, that's very, very problematic. Maintaining your inner peace is made much, much easier if you avoid toxic people. So this would be a really good thing to talk about, because if you're surrounded by toxic people or toxicity in general, living your purpose will be extremely difficult to do. Therefore, a really logical thing to talk about is how do you deal with toxic people? And if you let toxic people go, how have you found it to be benefiting your life? And I'm so very, very proud of everybody putting in their BORSOG code. This code allows you to think very, very seriously about what you will do if price goes against you, goes neutral, or goes for you, and what direction the market could take, down, flat, or up, summarized in a very simple code with how you feel about the market, how synchronized or not you are with the market. It's a very, very powerful risk management tool, and it's only for you. But by sharing it every single day, what you will do, you're calling to the market to reward you, and the market will listen. And if you're new to the channel, just reaching out or saying hi or sharing your code, that's a fantastic way to connect to the most incredible people on YouTube, as well as doing your active learning. And the market rewards active learning. Passive learning, it doesn't reward. And if you would like to apply for the CTKS Partial Scholarship, the link for the application is in the description of this video. I'll be awarding the first one next week. Please remember, crypto is volatile. Always prepare yourself for the best and worst case scenarios. Reality will likely be between them. Stay safe out there, my friends. Take care and see you next time. Bye for now.